Welcome, welcome, welcome. I hope everybody is good. It is Tuesday, 21st of July, so we're going to go through, obviously how the London session potentially could open. Had an epic July. I think this might be one of my best Julys on record. I don't want to jinx it. We've got nine more days left. So yeah, I'm obviously what I'm quite enjoying at the moment because we've split our trading up. It's putting less pressure on the intraday to obviously try and get things to trigger. And it's more like I was discussing with everyone yesterday. It's more those higher probability trade setups that trying to go for on those. There's not as much pressure. So that's obviously what's really helping us. It's not trying to force anything. So right, just a quick one before we get started. You guys know that I obviously like to go over things from a macro point of view. At the beginning of any trading, session, one of the things that I like to do is identify, which way the dollar is trading. We obviously trade everything against the dollar, AD USD, GBP USD, Euro USD, USD JPY, and gold. All right, so I do that for a reason. They've all got one common denominator. So really, we only need to worry about where the US dollar is. So that's obviously quite it's a good thing. It gives us an advantage. All right. So look at it from a macro point of view. We've obviously got good data coming out from June. All right. We had um, the had massive de-escalation in June, so obviously that gave lots of hype, and it just goes to show if you take this war out the way, the dollar is very strong, which obviously works in a good and a bad way, because obviously naturally they'll reduce interest rates once they've reduced it. It then holds. And they'll obviously wait for the next layer of data to come in. So that's obviously one thing. Dollar 100% is outperforming everything. But obviously, what's driving the dollar higher, right? Is obviously we've had since the beginning of July, which we won't get any of this data out until August, right? Since the beginning of July. We've obviously had massive escalation. I was reading it's night 10 of the US um, doing night strikes on Iran. Apparently, obviously, what their targets are is they're just trying to infiltrate anything that might potentially hurt the Strait of Hormuz being open. But obviously, shipping is limited going through it, and obviously we've got to then have a look at the kind of impacts that has, right? And obviously we're in high escalation at the moment, and there's no talks about it, kind of slowing. So what we've got to then think about, or what we should be looking at only is, how much is, shipping affected coming through it, and then how, we've even got to think about the costs of it for companies, because it doesn't matter what you do, even if you've got your own, B2B business, and you're importing stuff from China and selling it all cheap. Your costs are going to be more expensive, all right? Because there's loads of random factors which come in. We've got insurance, so everyone's insurance, who obviously own these shipping containers is going to be higher. Is there as much oil coming through it? One of the things which will majorly escalate this massively is if Iran go and hit an oil tanker, right? That to me, the moment is kind of tit for tat. I know that obviously we had one person die in the Middle East the other day because of debris. There's probably been, lots more, but it's not really been, um, yeah, it's not been broadcast on media. But so we've really got to look into the costs of everything. So having a little bit of a roundup on, the costs of it and, you know, um, yeah, kind of the expectation. I'm looking at this dollar movement at the moment as a little bit of a breather before the next move to the upside. I actually think we could target this 101,300. This week. Sorry, that's the worst line. But there we go. 101,300. So, also yields have had a bit of a breather, but they have pushed up heavy since Friday. So expecting, there's a lot of support here too. So I'm expecting these to kind of tail up and target this area here. Um, so with that being said, with everything that's going on, I can't obviously bet against the dollar again this morning. So in regards to news that's coming out, we've obviously had some UK data. We've had unemployment rates. Surprisingly, I was expecting this to come in slightly under, but pretty good. Pretty good data. Good employment. The unemployment rate's not dropped, but it's raised up, or it is stayed obviously where it's supposed to be. But yeah, so nothing which is going to hurt anyone. The only thing that we've got later on is ADP employment change. So let's wait and see what comes out of here. Jobs day data's been a bit mixed for the US. Overall, it's been pretty good, but we don't have a forecast yet, and obviously, I wonder if they've done this on purpose. And so let's wait and see. Oil is the next one we've got to be looking at here. Oil is still at that danger zone. Anywhere above probably 75 is it's a high cost for everything. And obviously, what's that going to do? That's obviously going to increase inflation worries. So that's going to strengthen the US dollar anymore. And of course, oil is priced in uh, do dollars. So it's gonna flood even more money in. So that's obviously why my overall picture here is that I want to bank on dollar strength. However, we're going to go cautious now. Gold's had a nice pump here. I just want this to, to settle down a bit this morning. It's flown up. We're obviously targeting these areas. Do I think it will continue? Probably not. You've got to think there would have been a lot of people in gold from up here, equal lows it tested yesterday or Friday, and obviously it tapped into that yesterday too, and so there'll be some profit taking coming off the table here. So what are the potential targets that we could be looking at? Well, this is a massive area here, and I don't think there's enough for it to break through. So we'll have a look at gold last. I'm going to sneeze again. Um, so yeah, we'll have a look at gold last. Right. So on that kind of note, I'm going to stay away from Aussie this morning. Purely because obviously Aussie is one of the biggest exporters of gold. I is if gold's driving, it's going to drive too. How much has it moved today. It's moved quite a lot already, and it's only quarter past 8. If you think yesterday it moved, say 52 pips, we've already moved probably over half that, So is there enough, going on for obviously it to drive higher? I'm not sure, so I'm going to stay away. We've then got GBP which has been a lot, slower. Asia is just pipped above Asia, so we do need to kind of let's mark up this Asian high and Asian low just for the sake of it. Um, just because it's going to help us gauge what is happening. I mean, it's been relatively small. All right, so I'm going to look to to sell here. Um, what have we got in regards to roundish numbers? Three, four, 500. It's probably not a bad one here. Let's have a look here. Where does that get us? Three, four, 500. Three, four, five. Let's go three, four, 550. What's that? We might want to increase this slightly. Yeah, we're going to increase it. We're going to do probably 15 pips. Yeah, three, four, 650. I quite like this. We've got a nice trend here. All right, we've popped up all already. So I would like to see one more test. Where does 40 pips? Because I quite like the fact that we're targeting Asian, low here. So yeah, I actually really like this trade. We're obviously not trying to take the biscuit here. We're obviously got the Asian, low here. So it's very realistic that obviously this will pop to the downside here. And so I'm just going to take these off for now, and then we'll start marking everything up. So you just clone these. One, two, three. It is quicker for me to do it like this. Four, five. There we go. Okay, so stops are going to be here. I'm going to keep it a bit tighter, all right, because we're obviously allocating for a bit of a movement. Uh, middle entry. If you obviously want to go aggressive, you can do all three. All right, so that's what I do. And then TP1, I'm going to go on this one here. It's bottom here, potentially a little bit higher. There we go. Let's put that one in. And then last but not least, this one here. Yeah. All right. So I'm pretty happy with this. It's going with trend. We just want this to pop up, tap us in. So remember that's going to be 500. So we want it. There we go. Do that. Right. I'm just going to put this in and then we'll go on to euro. Make sure you get your questions ready if you do have any. I'm obviously always happy to answer anything. So GBP USD, so trade idea. All right, there we go. So just want this to pop up. We've got a really nice trend. You could probably also put a bit of a Fibonacci on here, and it pretty much lines it up with the zone that we've got here. So that will be an extra confluence that we have here. Your euro pretty similar. If we look at euro on a daily, it's obviously been so bearish, but not very clean. It's actually horrible price action here. So. But obviously, still, we've got to know, one confluence that we can take from here is it's in a downtrend. Asia, pretty much the same. So let's just mark up the Asia high, and we'll mark up the Asia low as well, just because it just gives us that kind of rough outline of obviously what we can be looking at here. So we've got obviously, if we're marking up, we've got some resistance here. Let me just mark these up how I normally would, and then it will explain it a bit better. So we've got some resistance here. I would say we got some here, and then we've got some on these highs here. And then it isn't even worth going up any higher. So I probably wouldn't have this one here, and I think this one's a bit too tight. I actually do this ever so slightly differently. It's moving up pretty quickly. So I'm gonna go. Where does 4300 get us? 4300. I mean, it's above this area here. Let's just give it a little bit more space because it's moving up pretty quick. So let's go 4425, something like this. All right, something like this, and that would mean let's go for slightly lower. We obviously you have to have expectations. It's all well and good drawing on hundreds of pips on your risk to reward tool, but you've got to be realistic as to what it's gonna potentially hit. So I'm pretty happy with this. 4, 5. There you go. Uh, Believe it or not, I haven't had many complaints about me obviously not writing things out and just using these labeling tools, which I'm really happy about because having to write this out takes me blooming ages. There we go. Yellow. I actually think this is going to trigger pretty quickly. And then we got green, which we'll go around this area here for our TP1. There we go. Right. So we've got Euro USD sell trade idea. There we go. All right. Now we've got a couple of choices here. Gold, I don't. Gold, USD JPY. I'm gonna leave USD JPY off, but if I was gonna have it, it would be probably 250. So I would have an area of something like this, right? So I'd have it 250 to 100, yeah? And then I'd have it something like this, just to equal these highs, nothing else. And then probably just a nice 1 to 2. That is what I would have. All right, and I'd be banking on something like this happening where it's a very quick in out, done. And so that's what I would have. However, I'm not going to post that. Gold, we're gonna have to we're gonna have to play this on the safety. All right, so I'd say 490 to 4115. I'm still going to go, to the downside, but obviously we've got to allocate enough here for it to, have a bit of a release. Let's check out Asia. It's had a massive move in Asia, huge move. Just minus Asia high, huge move here. And right now on an intraday, you want to be trading it pretty, safely. I'm not too worried about that. I think yes. I think if we did a bit of a tighter stop, I mean, it's going to have to be a 200 pip stop and a 400 pip TP. So I'd be pretty happy with this. one more push, and then nice uh, release to the downside. It's realistic expectations coming into tap Asian high. It's way above here, way above this previous high here. So I'm going to go with this for a gold intraday morning trade idea. 3, 4, 5. There we go. So, it stops above here. So there we go. We've got TP1, got TP2, TP3. Sorry, entry 3. And then we're going to want probably our TP1 to be pretty tight because we're going to want to pop on stops to break even quite tight. So that's what I'm kind of looking at here for gold. Gold. There we go. Right. Remember, get your questions ready if you have any. It's no problem at all. Sell trade idea. There we go. Right. Let's head over to some of these questions. Right, Greg, can you explain the relationship between oils and yields again? Yep, very, very easy. Very, very e easy is that obviously if the world revolves around oil, yeah. All right, so if oil prices are high, all right, everything costs more. It costs more to run everything. Everything costs more. Just in a very, very simple way. We're probably, I mean, I don't know. I do look at it, and I don't look at it, and I probably should look at it. But even like running your car, all right, running your car at the moment is probably 20% more expensive, all right, because of the fuel, how expensive it is. All right, so higher oil, right, is gonna give the whole world inflation worries. All right, now the big guys who are in the markets, that's obviously gonna inflation worries are gonna obviously they're not gonna want to put their money into to gold or or anything like that. They're going to want to put it into government bonds, all right? Because they know that inflation worries equals keeping interest rates higher, all right? Because they want to curb everyone's spending, all right? They want to encourage money to flow into the country. Remember how the FX markets work? Really, it's the US's interest rate is higher than Euro's interest rate. So if you're in so if you got your euros, you're better off putting them into the dollar because you're gonna make more money. If obviously they end up dropping their interest rate and euros is higher, they're gonna put money into euro. So that's kind of how the FX markets work in a very, very basic, simple way. But yeah, it's purely with oil high, inflation worries, and so obviously they are happy to put their or the big money coming into the dollar. They're obviously happy to put it in there because they know that interest rates are going to stay higher. All right, Ian. Um, Ian, it's easier to see as you are doing it now. I find it quicker to execute the trade. Brilliant. Greg, so there's a lag in the relationship. Not really. It kind of happens, at the same time if we have yields here and obviously oil here, that the charts aren't too far off each other, you can see here, right? So a pump, a dump, a pump, oil, it's had a pump, a dump, a pump, so they're pretty much, identical in times like this. It's not always like this. It's just because, well, obviously, we're in a bit of an oil driven